Good afternoon, everyone. I'm Tim Richards, Technical Services Manager of the Managing General Agents Association, and on behalf of the MGAA, I'd like to welcome you to our briefing this afternoon. This is being delivered by AXA with effective ways to cross-sell to maximise opportunities. I'd just like to run through a few housekeeping points. Please ensure your microphone and camera are turned off unless you're contributing. If you'd like to ask a question, feel free to use the chat button at the bottom of your screen. Time allowing, these will be asked and answered at the end of the event. If we run out of time, questions will be answered post-event, and this presentation is accredited for CPD hours if relevant to your ongoing professional development programme. The briefing is being recorded, and a link to the recording will be issued post-event together with the slides and our feedback survey. Please take the time to complete our survey. It takes no longer than 2 minutes and enables us to continue to deliver the best possible future events to our members. So as a recap, today's session is from AXA with effective ways to cross-sell to maximise opportunities. So let me introduce you to our presenters, Joel Markham and Lee Hudson. So Joel joined AXA in 2020 as Head of Sales and Marketing for AXA's Schemes and Delegated Authority business. This involves managing their operational teams, scheme relationships, and new deals implementation. Joel has 20 years experience in the GI personal and commercial lines market and has worked at Allianz, Zurich and Ageas. Lee has over 30 years underwriting experience with a specialisation in financial lines, particularly PI. Currently residing in his hometown of Bristol, Lee has worked all around the UK, including London and in the United States. He joined AXA UK in December 2021 as Head of Specialty, focusing on developing AXA's appetite for all things non-P&C, LDI, bonds, etc. So without further ado, let me pass you across to Joel to begin the briefing. So Joel, over to you.
Good afternoon, everybody, and welcome. Thank you for joining us. We really do appreciate you taking time, especially on a nice sunny day outside. So Lee and I have just been briefly introduced, and if you've got any questions, please do ask as we go through the chat function. Key things for us today are, and these are really, really high level, but in terms of some learning objectives, what should you be able to kind of be able to talk about when you leave today with your colleagues? So explaining what cross-selling is. Purpose there really is just to deep delve into what is it not, and to talk through ways to make that clearer. Outline how to understand and target your customer needs. Really getting into that data. Data's everywhere, but how do you try and understand it to make a difference? Lee will then kind of talk you through the best ways for efficient cross-selling from an insurance perspective and taking on an MGA angle. And then we'll talk about which products work best for cross-selling and other considerations. I'm learning Zoom as I go, so hopefully this is all coming across and you can see the slides perfectly. So, what is cross-selling? As Tim said, we will share the slides. They are all imagery. So if you do have any questions after the event or you want any follow-up on anything, please just let us know. So what is cross-selling? So if you take a step back and you think about our day-to-day lives, put our insurance hats aside for a second, we have it done to us the entire time. So cross-selling is very much one of three ways that businesses try to get a bit more from their customers. So cross-selling is about recommending additional products that complement the one that is being bought. So for example, if you're buying a phone, do you get recommended to buy a phone case with it? Upselling, actually there, it's about encouraging people to upgrade to a better or potentially more expensive version of the purchase that someone's willing to make. So there, you could think about upgrading to a newer phone, using the phone example. A more powerful device, giving you something else that you might want from your mobile. And there is something called downselling, which sounds like it would be taking something away from people, but actually what it is about recommending a cheaper or a slightly lesser product that is more suitable to the client's budget. So again, using the phone version, it might be somebody is looking at their costs and they want to pull back a little bit, and a phone company might offer you last year's cheaper model. So how do we build out on the phone examples? And obviously what we're going to focus on today is the cross-selling elements of that. So insurance terms, what does that really mean? It's about adding a new product to cover that's already been purchased. So think about if you've got a commercial combined product, then you might be adding legal expenses to it. You might be adding management liability to it, which Lee will cover off in a bit more detail. Or, for example, if you think about another aspect of insurance, if you're an electronics retailer, if you've ever been on Amazon, other places are available, you'll probably get suggested gadget insurance or other protections alongside it with something like a new laptop purchase or various things like that. So they are all where insurance is cross-selling. I have a personal lines background, and a key thing has always been how do you cross-sell a white van driver and a tradesperson? Surely that you should be able to have those two alongside each other and really make that work. Upselling from an insurance perspective, again, would be around making sure that you're increasing the cover purchased by the customer. So I think in a limits, think where you are on set bandings, how do you make sure that that is correct for the customer that you're selling to? But in each of those situations, what you're doing is you're encouraging further engagement, further purchases, more pound being spent by the customer. But the big difference is cross-selling is not about looking to seek to change what customers have, but you are trying to add to it. So for those of you that are a little bit of a sucker like me, when you go into McDonald's and they go, do you want a fries with that? That's exactly what cross-selling is. I appreciate that I'm really ramming it home, but I think it's quite important when you are thinking about how to engage your customers that you have a broad understanding of those three things. So that's cross-selling, upselling, and downselling. Okay. So what does it all really mean when we start thinking about insurance and the world of MGAs? Well, let's be honest, AXA has been in the market for delegated authority for over 30 years. And one of the things that we love about this channel is the fact that MGAs thrive because they seem to be able to react, and we believe that they can, quicker to customers' needs. They can react quicker to niches than other distribution channels and potentially other composite insurers. It's one of the reasons why AXA does delegated authority. It allows us to back a partner, go into a market quicker than if we were potentially going to do that ourselves. And that's, for us, therefore, is thinking about how do we cross-sell. I think actually MGAs in the schemes market, we might give ourselves a nice big green tick and say we do it quite well because that's kind of what we're about. But actually, we do believe at AXA there are many other opportunities for cross-selling and making let me slide on and making sure that we are targeting your customers' needs. So again, just to bring that alive, why should it matter if you're running an MGA, you have a delegated authority? So building on what I said earlier, for us at AXA, it's about how do we make sure that we are backing a scheme or an MGA that's able to offer a product that's tailored to its customers' needs rather than just a package that you can get off the shelf? How do we make sure that we enable you as a capacity provider or a scheme to really target those customer needs, give them what they want, and then really importantly, build that longevity of relationship, build up that trust with the customer that they go, they understand me. I'm a hairdresser, I'm a beauty salon, I'm a mobile phone shop. Actually, I've got a product that is built specifically for the needs that I have, rather than they go, you're a homogenous SME customer and here's a product and you've got all of these other covers in there that you don't really need. The MGA space is a great place to play around with that and really make sure that we are targeting customer needs. And let's be honest, then making it a little bit easier for brokers to demonstrate the value of the product that you're offering, the breadth of the cover that you're offering, and the importance of the MGA broker relationship there should not be lost. So where do you get all of that information? So I think insurance, or as an industry, we pride ourselves on we've got data for everything, and I think we probably do. Do we use it though always in the ways that would assist in cross-selling? I don't think we do. I think we focus quite rightly on a lot of underwriting performance, your loss picks, your projections, your portfolio mixes, your rate strengths, your excesses, all that kind of jazz. All of that's really important for running the book of business that you've got. no disagreement there, critically important. But actually, how many of us take the time to take a step back and go, actually, what does the end customer want? And defining the end customer potentially as the policyholder or as MGAs and schemes, the retail broker trying to get through to you. So it's really important to then spend time with those customer groups. And actually, it's not as time consuming and nor expensive as you might think. There's lots of information that you can purchase now around customer needs analysis. We run focus groups in AXA in our business, and the amount of claims data that you can buy from an industry-wide view. Again, all of it's there. It's just about putting how do I think about it from a client acquisition and a product perspective, rather than is it going to be a good bet for our scheme. The kind of questions to think about then before you think about segmenting the customers, but is to think about, so what products do you often see sold together? I mentioned, van and trades as two obvious things, but what else are there? Can you find something that somebody else isn't doing? Or perhaps someone is doing it well, but you can build on it and do better. Or is it a case of you've got a great product and there might be a potential to add extras into it that really then start meeting the customer's needs for that segment? Depending on how good your data is, I know a lot of the MGAs have moved into some of the insurtech space. Actually, we're using analysis, putting web analytics, not easy to say, analytics behind your offering. Where are people considering a purchase? So if you're an MGA and you've got a quote and buy, you've got brokers, you'll be able to see, well, do they hover around adding legal expenses? Do they add it in, take it out? Do they add in management liability? And now it's just to see what the costs could be because they think that customer group might need it. The other thing is to look at how many people come back after their previous purchase. And what do I mean by that? I mean, how many people add that cover in afterwards? Or how many other people might be buying that cover somewhere else? So that engagement, if you're an MGA or scheme with your retail brokers, where are they putting their cyber, their engineering, their computer cover, their inspection? Where is that going? Is there a way to incorporate that into your wordings to make sure that you're meeting those customers' needs? And then the last question, which I think is really important from an insurance perspective, actually, what products do they wish they had so that they can mitigate the risks that are pertinent to their trade sector? Now, that might be limits in the property and casualty side of things. It could be differences from a fleet perspective in terms of telematics, young drivers. All of these things are well known, but it's how do you start bringing them together and make sure that they are pertinent? So one of the things that I wanted to just kind of explain is how to start. How do you make sense of all of that? Because there's lots of good questions, but actually it's a lot of noise at the same time. So where to start? So getting hold of either using your own data or getting hold of data that's available from the industry and starting to slice and think like a customer. So I came up with 5 things that you could potentially consider when thinking about how to target your customer needs a bit better. So the obvious one, and the one that screams look at us from an insurance perspective, is geographic. So what do I mean? Where are the people based? That's a clear rating factor, but also that gives that individual customer a need, right? If they are in a flood zone, they have different needs to somebody who isn't. Is there a way to tailor that? And you can see there are flood infill products that have probably built themselves around those data points. You've got behavioural. So how does that client interact with your business? Are there clients that interact differently with you? Are there people that want to interact and there are people that just don't want to interact? How do you build something that can target those in a more broad view? And again, if you've got an MGA capability, how do you start tracking how many products do your brokers use you for? And how do you think differently about your distribution strategy to give them more of what they want so that you can start selling more than one product or one policy to that broker? We have MGAs where their average is over 5. So they've really tried to target that broker when they're in the buying or the quote stage for their customer. Demographic, incredibly powerful, and normally where a lot of focus is put outside of insurance. We obviously have a lot of rules around pricing and things that we can think about, but actually, are there thought processes, are there segments where we can actually take the learning out of side of insurance and bring it in? Are the buying habits very different from somebody who's in the gig economy from somebody who's a very well established SME purchaser? Well, yes, there are huge differences. And actually, you can see insurtechs that are building out and trying to really target that gig economy so they can provide products that they need, length of contracts that people need, and the flexibility around payments that they need, thinking about month on month off policies and versus annual policies, that the SME who's budgeted £1,000 for their insurance for the year is comfortable paying that, is understanding what they want. So how to make sure that you just think behaviorally differently, or think about, the customer's behavior differently, in terms of what do you stand for, what products do you want to offer them. One of the things that I think is sometimes missed is we can just keep going and just keep doing more of the same, offering more products to the same people. But actually taking a step back and doing something called value-based segmentation, which is around the review of profitability and the value that that customer segment creates for you, especially as an MGA or a broker. How do you find profitable customers that want to engage with you, that are simple to manage, or actually great customers that don't need lots of attention? They aren't going to have lots of midterm alterations. They aren't going to cause you lots of administration during the year. How do you make sure that you target your products to go after them? And actually, you can see, and what's great, I think, about the MGA market is some people are already doing that. They focus and zone in on, that's what we're about, that's what we do. At AXA, we've just won a new personal accident scheme where that is all that they do. They don't do anything else. Actually, we want to talk to them about cross-selling and we want to talk to them about other products, but actually they are so zoomed in on their niche client and segment that actually they'll have a discussion, but they don't want to be distracted from their knitting, which is good. Lee will cover a bit more around product, but I'll just reference here. Loss ratio sounds obvious, right? But if you're writing lots of good quality, profitable business, how do you attract more of those customers? Why are they not buying? If you've got good loss ratios but poor conversion in your quote analysis, is it pricing, or is it actually they want something different from you? What could that be? Well, you know who they are, you know who the brokers are, they've probably placed that business or got quotes. So you can dig a little bit deeper and try to find out what is the root cause of potentially why that customer didn't buy. And not just assume it's because you weren't the cheapest. Actually, someone somewhere else may have charged more, but given them more cover or more products that are effective for them, and suits their needs. So I'm going to pass over to Lee in a minute, but what does it really mean? It means that when you start to get into this, you can start defining types of customer that you want to get hold of to support your growth. You can then identify the right tools and the right ways to get to them, be that adding products in or trying to target them specifically, or, as I said a minute ago, looking at your quote data, trying to understand why they aren't sticking with you, and then pull it all together in a really simplified view of actually what is the insurance solution for those customer segments based on their buying habits, the trade habits, and the segments that I just talked about. And we can definitely see that. So we get sent some incredible opportunities for people who have got this thought through. You've got others that actually, when you start picking under their loss ratios or picking under their product strategy for the future, don't always have that. And we are really drawn to support people who aren't just looking for capacity, but they're looking to grow, and they're looking to grow their facility as customers change. And one point that I will make is you've got to keep doing it because customers evolve. A great example at the moment across, if you look at the contractors market, is a lot of people in security. You've got Martin's Law that's coming in. There's going to be a change in that dynamic. Customers' requirements today will be very different from the renewal that they bought last year, and they will definitely be different from the renewal in 2025. So how do we future-proof your products from an MGA perspective and make sure that you add in the covers that they want? And the key thing there is making sure you engage, your capacity providers in terms of your plans. And then if they're not interested, there may well be others that are, even if it's a case of you want somebody to just write those add-on products alongside your core product. A lot of people, including AXA, we will write the core products, we'll write the additional products, even if we don't write the core product as the main capacity provider. So hopefully what I've done in the last 15 minutes is just bring alive the theory, I suppose, at the front end of the journey, the ways to go around slicing your data, or just some examples of how to think about it. You'll all have your own data and how you think about it. And now what I'm going to try and do is pass over to Lee. Zoom hopefully is going to let me do it seamlessly. Who kind of just start bringing this alive from an MGA and a capacity perspective in a bit more detail for you. Lee, hopefully I can pass over to you.
Yep, thanks very much, Joel. Really good, thank you. I think, plainly, as Joel has outlined there are some massive benefits to be gained from doing cross-selling. Nobody's going to disagree that satisfying more customer needs is a good thing, but other benefits come from doing so. That hopefully you're earning more premium, more commission, of course. Hopefully, you're creating more customer satisfaction, which will lead to them staying with you for longer. And hopefully you're also staving off competition who might be trying to get into those areas that perhaps you've not actually managed to satisfy when you look at the customer needs initially. However, it's not all good. There are dangers too. Sometimes taking on more complexity can mean that the service that you provide is not quite so slick. Perhaps if you've got really, really good at one particular product, one particular niche, there is actually risk in trying to do something more, trying to do something wider. And so that is something to be wary of. You don't want to get absolutely expert at something and then dilute that expertise by trying to do something that not quite so well. So it's very important to think very carefully about how to do that, how to make sure that you are building on what you do well and not undermining it. And I think when it comes to efficient cross-selling, doing that preparation and making sure you understand who it is that you're looking after and how you're going to go about it and how you're going to do so quickly and easily is very important. Complexity is the enemy here. As soon as we start doing more than one line of business, the complexity ramps up exponentially. And so getting that wrong could really jeopardize the core of what you do. So making sure you do it right is very important, and preparation is the way to do that. I think I also think that it's important to build once and then sell many, many times. If you try to do this bespokely, one by one, speaking to each individual customer and building a cross-class solution for each of them, then it becomes quite time-consuming, rather expensive, and fraught with risk. Whereas if you've worked beforehand to identify a customer set who have similar needs and build a relatively flexible solution for all those customers, and then use that template to pursue a number of opportunities, then you've built something which can be done efficiently, that can work for many different customers, that doesn't take up too much time, and you've reduced that risk of actually upsetting the main reason why you're having the conversation with the customer. So there's lots there that can be done in terms of thinking about who the customer base is, as Joel was saying, and then thinking about the products that suit. Some customers in particular areas are going to have very specific needs, whereas others are very generic. So PI might be a specific purchase for professionals, yet every professional pretty much works out of an office. So they have a need for an office product, which is very straightforward, or ought to be very straightforward. But it can work the other way around as well. So you might sell office products to travel agents, pretty much just offices, but travel agents need an ABTA bond, which is a very specific type of insurance. And so that cross-sell, that is a very specific thing for those customers. One product that Joel mentioned was management liability. I think we're all very used to D&O now. It's been around a long time. We recognise the need for pretty much every business in the UK. But there is a wide range of possible options there, from what are essentially kind of legal expenses policies, all the way up to very extensive legal services provided in addition to indemnity. So looking into that angle, that is a potential cross-sell and upsell at the same time for customers. And if you can really get them to engage with those products, particularly small businesses, there are huge benefits to be gained for those businesses. And if they engage with those legal services, then particularly when they kind of take on employees and they get help with that sort of thing, it can make a huge difference as to how loyal the customer will be in the future. There's massive benefits to be had in that space. And as I say, management liability is a product that pretty much every business ought to be purchasing, and there's so much benefit there for them beyond just mere indemnity. Another one that's emerging, of course, is cyber. Now, I'm of the belief that cyber means something different. Cyber insurance means something different to every single person you ever speak to about it. And so there are lots and lots of different challenges there. I think at the moment it's actually a pretty difficult cross-sell because the options available from the marketplace and what is required from various different businesses are very unique. But if you have got a very vertical set of customers, like they're in a particular segment. Let's think of opticians, for example. Then you can really assess their needs and work quite closely with an insurer to make sure that the cyber product that is there is that is put in place is correct. Because it could be quite difficult, that one, if you got it wrong. I think if you're trying to cover a large spread of customers, then the one option, which is usually what cross-selling is about, is not really an efficient way of doing things. So really it's about identifying the right customers, identifying the needs and seeing if the products are available to satisfy them, and then putting in place a process which means that, to use an old-fashioned phrase, you're shelling peas. Build it once, sell it many, many times. Incorporate a bit of flexibility. We've got to think about the actual customer's needs. We can't treat them all the same, but we very much need to kind of keep those options down because, as I said, complexity is very much against the success that can be had in cross-selling. I think from an MGA perspective, you have more options here. We certainly, within AXA, we try to sell as many products to a customer as possible, but we've only got kind of one underwriting view within AXA, I suppose. What we think about a property risk from our property department might be different from what we think about it in our liability department. So selling the two products together can be difficult. Lots of roofing contractor might be okay from a property perspective, but from a liability perspective, obviously there's lots of risk from working at height. So the great advantage for an MGA is that you can pick and choose capacity. You can find the right ones and put them together. As Joel suggested earlier, we have done that on occasion. We will offer certain products and then team up with other insurers via an MGA to offer that rounded solution. And as an MGA, you'd get the opportunity to work out who is best all round. Hopefully, you can get as much as possible from one insurer to try and reduce that complexity. But certain products, particularly the very specialist ones, things like the ABTA bonds I mentioned, or even various different types of cyber insurance, you probably do need to go to very particular insurers with a very specialist capability. But as an MGA, you can bring that all into one place and do it, and put your brand on it and show it as one thing to the customer. And perhaps if you're an MGA that also handles claims, you can offer that singular claim service as well. So there are definitely options there to be able to be a bit more joined up, a bit more flexible, a bit more complete for the customer than many composite insurers can be, as well as being more fleet of foot, which is obviously why a lot of MGAs do extremely well. So that was kind of a few of the products that can work. Some of the ones that we're trying to access at the moment to cross-sell, we're certainly looking to cross-sell Office onto PI. That's I think ought to be quite an easy one. A lot of small professional indemnity insurers, they will tend to, or companies that need PI, they will tend to be relatively small businesses with one office, a number of employees, and you can really package that up. I think key really to try and get those kind of generic packages across is to not go to the customer with huge question sets. Is there enough? Do we have enough knowledge about the customer already to be able to offer that package as part, perhaps, of their renewal inquiry? So when the renewal comes in, they buy PI from us. We can see, the size of the business, their location, the number of employees they have. We can make some assumptions. We can do some investigations in the background, and can we then offer a quotation, subject maybe to a statement of fact, that offers them the more rounded package, particularly if we know that they're buying that product elsewhere already. So, just being a bit smarter about things, trying to make things easy and offer the customer a much simpler solution. These things can make cross-selling really work. Another product that we're looking to try to offer as much as possible is management liability, which we work closely with Radar on. We've got a lot of tools like Experian to be able to look into businesses and understand who they are and what they're about. Again, with a statement of fact, we can offer those quotations without having to get a great big proposal form from the customer in the first instance. I do think that if you go to a customer, particularly when you sell them a product already, and say, can we ask you some more questions so that we can sell you something else? You're not going to get a lot of success that way. Not a lot of them are going to be forthcoming with that information in that way. If we can actually, use the information we've got to be able to add an extra product, or to offer something more rounded to a customer, more suited to their actual needs, then these are all good things. Obviously, we should always be aware of ever doing anything that's embedded or hidden, or charging the customer for something they haven't chosen. These are absolute no-nos, as we all know. But if we can make it easy for the customer to select our option over another, or explain to them why the cover that we're offering is of benefit to them, and then be very opaque, or be very clear about what they're paying for, and each part of what they're paying for, and then these are all legitimate things to do in offering products to customers. I'm hoping that in the future we'll get better at cyber. At the moment, cyber is not a product that we're cross-selling through most of our channels, but it is something we're launching into at the moment. And I think cyber is going to be a product that, once it settles down and kind of finds its niche and works out what it's for, particularly in the SME space in the UK, it is going to become a product that every single customer is going to need to buy. So, that's possibly the ultimate cross-sell opportunity, really, isn't it? Every customer is going to need it. So we're going to need to add it onto every policy that we offer. Otherwise, customers are going to be seeking it elsewhere, standalone, which is a threat to our continued relationship with those customers. D&O, once upon a time, was a niche product. The older generation like me can remember when it was something that we had to add on. But now, every customer in every business in the UK should have it. I think cyber will go the same way pretty rapidly. Once we understand what the needs are for the various different segments of SME, and that's coming. That's moving really, really quickly, and I hope that AXA is going to be a part of that push going forwards. What other products can you sell? I mean, I think, as Joel was saying, it is very much around understanding what those customer needs are, trying not to do them one by one. Work out what the big constituency in your business is, but then being careful to complement what you do as a specialization, not undermine it or make things too difficult and complicated for the customer. The last thing we want to do is to be pushy with them beyond actually helping them. The last kind of point I'd make from an MGA perspective, in terms of the benefits with products and cross-selling, is that actually, in my experience, and it's a little bit hard to explain, but in my experience, selling a wider portfolio of products to your customer base will ultimately increase or decrease, actually, but actually improve the overall loss ratio that you'll see across the book of business. It may seem a little bit kind of counterintuitive to, if you run a separate PI book and a separate liability book, they turn up certain loss ratios. But if you put them together, they'll actually perform better. And that has, in my experience, been the case. selling multiple products to single customers does benefit the bottom line. I'm not quite sure why, but I'm not going to argue with the experience of it. It's what I've seen pretty much every time I've seen a successful cross sell. The overall loss ratio has fallen. The overall frequency of claim, in fact, has dropped when we've succeeded in selling multiple products to multiple customers in a particular segment. So, from an MGA perspective, you want to be able to provide your capacity providers with improved loss ratios, because the better the margin, the more that you are earning yourselves, particularly if you're on profit shares and so on. So there's definitely a benefit there, one that is a little bit difficult to quantify. But like I say, I've never seen it go the other way. It's always been an improvement. So that's something definitely to bear in mind. It is, it's always I think a hidden benefit of cross-selling. Okay, Gary, Joel, sorry, I think I've covered over a lot of things there.
Yeah, no, Lee, thank you ever so much. We're not going to do an AXA sell, but I think all I wanted to get across is our delegated authority team is very much in the market for these kind of conversations. So be that you are running your own wording and you want to talk to somebody about embedding something like Lee was talking about, we're completely open to run co-manufacture wordings. We're happy to run sole manufacture wordings and support alongside it. We're happy to think about upselling if you want to look for an excess layer or anything like that. We are comfortable as well talking to you about what we can offer you and your MGA and your individual schemes. So I could do lots of selling, but it's not what we're here to do today. We're here to help you in terms of what your strategies might be for winning more customers. But one thing I would build on from Lee is not only is it good for loss ratios, terms and conditions may occur because we can't prove it, but we know it is. We don't know why, but we know it is also not losing sight of how many policies you sell per customer, and actually bringing that into some of the metrics that you think about as a business. It's definitely something that Lee's brought into our thinking in AXA. How do we get better at developing stronger, more robust or broader insurance relationships for our customers and give them more of what they need once rather than multiple times. So do consider us. Like I said, I'm not going to do much of a sell, but we are capable of stepping in and working with you. And all of the examples that we have given today are of facilities where we have stepped in, offered cross-sell opportunities, or schemes where we have stepped in as the niche provider of a very well-defined scheme or customer segment and niche. So I won't go over the learning objectives. We always thought we'd do it in about 40 minutes, Lee, so we're kind of nearly there. But I'm not sure, Tim, if there are any questions. I can't see because I'm sharing my screen. I can't see if we've got any questions or if anybody wants to ask a question that has been posed.
No questions as yet, Joel. So just a note to everyone that if anyone does have a question, now is the time to ask. Just a question really from my own point of view, really. I just wondered if Lee and Joel, whether you've come across any particularly successful pairings of two products.
Lee, I'm happy to give you the PIPL one. That probably is best coming from you.
Absolutely. PI and PL are married at the hip, really. If you've got somebody who's got a little bit of a products exposure, but are really kind of giving advice to customers, then put those with in together. Separating them can make life very difficult, because it will come down to proximate calls. Some people are of the misunderstanding that PI is financial loss and PL is about injury and products. It's not that simple, actually. Bodily injury is covered by PI policies if that bodily injury emanates from professional advice, as opposed to just a basic slip and trip on premises. So it is about the proximate cause. It is about making sure if you've got one insurer on that, you just avoid all the arguments basically, and you just discuss which excess is going to be paid. Much better place to be. So I would always say that if any kind of PI put together with PL and the rest of the office kind of covers makes a lot of sense. That's a very simple thing to put together.
Yeah, I completely agree. We talk about the wording, from a position of back to back. They literally line up against each other. So there's no gaps from the customer, which is at the end of the day what we all want to achieve and make sure they've got the cover that they need. If I was to think about it to answer that question a slightly different way, from a personal lines background, moving into commercial, one of the things I've kind of noticed is that that tradesman and white van person, it's never worked as seamlessly as it potentially could. But I've also seen a lot of people try, and that one on paper you would just think works, but actually there's some very different buying habits from somebody buying in their mind a van from an aggregator and maybe then getting a trades policy from a broker, and the two are slightly different mindsets in terms of buying behaviours, and potentially that's why it hasn't always soared. There are many examples of it doing well, but when you think about the number of vans and the number of tradespeople out there, you'd think it'd be a much bigger opportunity than I've personally ever seen nailed. And insurers complicate it at times, but yeah, there's definitely opportunities there too. And I would say, just to build on the PIPL thing, it's sometimes as simple as what Lee was saying, getting ahead of what the customer's going to need. So thinking ahead to the cyber, thinking ahead to the MLP. We have a tendency as an industry sometimes not to give the customer what we know that they need, because we don't necessarily have the confidence to explain it to them in a way that's very clear so they can understand the risk that they are taking. And I think that's just something that I would encourage everybody to be doing, so that we can get the right products to them, so it becomes less of a price purchase and more of an advice purchase. And I think cross-sell's got a great opportunity to help with that journey.
Absolutely, John. Can I just add? I think with cross-selling, when we think about some of these professional trades, certainly management liability, PI as well to a large extent, but we're spending quite a lot of time, as businesses, judging those customers as to they're well-run businesses with those financial lines products. So I think cross-selling on financial lines products is generally probably a bit easier because you've already judged whether that business is run well, whether it's a quality business. Generally, if a business is run well, then they tend to look after their buildings, they tend to look after their staff. So generally, cross-selling against that decision-making is a little bit easier that way around, I would say.
Thanks, mate.
That example's that's how they use. If you look at some car manufacturers, if somebody buys the extra safety pack, they then can see a correlation between that decision and better loss ratios for that customer and better claims experience. Just personalised angle. So definitely true in terms of seeing that through. Sorry, Tim.
Thanks, Joel. Yeah, no further questions at the moment. So still time to get a last question in if you wish. Other than that, I don't know, Joel or Lee, if you have any closing comments at the end of the briefing.
No, not for me, other than a massive thank you for joining us and spending the time with us and AXA schemes. Like I said, we're not doing a sell on us, but we're very passionate about the MGA and the MGA industry. So if there's out of this, if you've got any questions or you want to reach out, both of our email addresses are on the slides that will be shared, and please don't hesitate to contact either Lee or myself.
Great, thank you. In that case, we'll end it there. So thanks very much for your time, and thanks very much, Joel and Lee, for a very beneficial session. You can reach both presenters on the details which will be shown on the slides, as Joel has said. You can also contact me at tim.richards@mgaa.co.uk with any questions or introductions, and I'll be very happy to pass those on. Thanks to all of you for joining us, and don't forget to provide your feedback, which will be coming with the slides and a link to this recording. And I do hope you all have a great afternoon. So thanks again for joining us. Thanks again, Joel and Lee, and see you all soon.